Fed lowered interest rates, but has inflation been beaten? Now that the Federal Reserve has lowered interest rates for the first time since the pandemic, that must mean inflation has been tamed, right? After all, the Fed staunchly maintained decade-high rates to combat stubborn inflation in their goal to hit 2%. However, inflation has not technically reached 2% yet, and consumers and business owners alike are feeling the effects. The latest Consumer Price Index reveals that prices continued to rise 2.5% over the last 12 months, and yet interest rates were slashed at last week's meeting. Many speculate that this move was related to the economic concerns plaguing Americans the past few months. First, the Sahm rule was triggered when unemployment rose in the summer. Then, the US Treasury Yield began normalizing, which can happen right before a recession hits. Despite the 0.5% rate cut supposedly meant to balance the American economy after the rocky year, the Fed admits it may not help much. Inflation continues to make the country struggle. Even if prices are no longer climbing at an extraordinary pace, they are still at the peak left behind. Even Fed Chair Jerome Powell has said that Americans will continue experiencing high prices,